Hi, this is Zak Mir with a review of the best of the bulletin board heroes of the past year. Starting off with Avacta, which had its weeks of glory back in June with a break of that resistance line there from April. The main giveaway, though, apart from that, which basically one probably wouldn't have drawn until the shares had actually moved, was the break of the RSI back above neutral 50 for the first time in months there. Hadn't been above there since at least February. And then the RSI rebound off neutral 50, one of our favourite signals, combined with the 50-day moving average, and that was around the 43 pence area. Obviously, the shares went up to as high as the 83 pence level, or 86 pence level, just a few weeks later. It's been a tough year for the shares. They've been in this falling triangle, falling trend channel. The only plus at the moment, I suppose, is the way that we've had another bounce off RSI 50, and so it looks as though the current rebound may have legs and may be able to take the shares back up to that main July resistance line there, back up at 59 pence, hopefully by the end of next month. But let's see if that RSI 50 rebound does the trick as it did back in June. Moving on to Audioboom, which was perhaps slightly easier to get a handle on. When it rebounded, it basically gapped up off the lows. There was a false dawn there back in October, and we went to new lows, which obviously wasn't very friendly. But the second time lucky with a gap through the 50-day moving average, the blue line there, and then pushing through the 200-day line. Our original or initial target there was up to £3. Next case scenario, or next level up, was up to 370 pence, and we're currently looking for up to the £5 level, maybe again by the end of next month. The key here, though, is that we had an unfilled gap to the upside off the lows, and that tends to be a very good signal, and tends to be one that even if you're not looking for it, you cannot miss. Golden cross there to back the move, and hopefully the shares will get up to £5 while they're above £3.70, the previous target. Onto a stock which was a riser earlier last year, in the first half of last year, and that was Bluebird, and almost the same as the situation at Audioboom, so a gap off the low, in this case through the 50 and 200-day moving averages. Shares rallied from around the 0.8 level to 1.8 before tumbling like a stone, but at least we did have that rally there, and second gap there back in June, which then took the shares to the highs. In terms of the exit, I suppose breaking back below the 50-day line around £0.015 was a warning that all was not well. On to Carlco, which I covered quite a few times during the year, and here it was another gap off the low there, in this case between the 50 and 200-day moving averages. We had another gap there back in June, and a final gap there in September. We tend to have 2 or 3 gaps higher in any rally, and you can see that the rally ended with a break of that, the floor of that channel there from back in January. The April uptrend line there breaking around 34 pence, so there was a warning that all was not well over and above the gap down that we had there after a bull trap back in early December. Moving on to one of the highlights of the year, both on a fundamental and a technical basis. Here we had a situation with EnergyPathways, which came to market this time last year, but the drift was in place basically from December last year to as late as early October, when the funding came through. Here we had a break of the August resistance there, around 2.8 pence, 2.9 pence, and the 200-day line. The 50-day line was already rising, so that those two candles there gave us the heads up that the shares were turning around. And then obviously we had the gap later, unfilled gap to the upside. Another opportunity there back at the end, or towards the end of October. Still hanging on in there, but again, as with the previous example with other situations where there's a topping out process, we'd like to stay on the right side of that 50-day line there, around 8.6 pence, and certainly don't really want to have any sustained price action now back below recent 7.8 pence support. RSI is also pushed that back below neutral 50, so we are on guard for a potential breakdown here. Rising trend channel there, and that's also been broken, the uptrend line there from October, so we really need to hold where we are now for EnergyPathways, and let's see if the shares can deliver. If you're cautious, you wait for a break of 10.5 pence and the post-November resistance for the stock. Moving on to a stock which probably you wouldn't remember as being a great one, but actually in the case of E-Star, it was a great start to the year. In fact, the unfilled gap to the upside off the lows came back in March, or the beginning of April, in fact, and the shares doubled after that by the early part of May, rather. And here you can see that basically similar to the other setups like the Audiobooms, etc., where you have a gap off the low and unfilled gap off the low, and then the shares motor. You can see that in the case of E-Star, it had its consolidation, a bit like EnergyPathways is having at the moment, and we didn't want it to break the 3.2 pence area, but obviously that was done in early July, and that was the end of the rally. Moving on to a stock which probably delights a lot of people in terms of its turnaround, and it is Fusion Antibodies, extended base for the shares, but the giveaway was the bear trap gap reversal that we had back in September. So back to the lows and then gapping up from there, and that gap remained unfilled. Also broke a line of resistance there, but actually the gap, the best giveaway of a turnaround, it indicates that the bears have been caught on the hop, and we've hit our second target there at around 7.1 pence. Still looking for 9 pence perhaps by the end of next month. And overall, you can see the pattern here, a beautiful saucer-shaped reversal that's been in place since the beginning of last year. On to Filtronic, which has its deal with SpaceX, and here basically the rally started late last year with a break of resistance through the 17 pence level. That was also backed up by, and if you missed that, that was backed up by a gap to the upside that we had in December, and basically at 20 pence, and the shares haven't really looked back since then. Rising trend channel from November last year, and we're still above the floor of the channel there at 70 pence. While we're above that, looking for the shares to hit up to 105 by the end of February, and still gapping up there, so it does look as though the situation is strong, as well as having the bounce off RSI 50 that we've just had in the past week. Moving on to a stock which was a massive riser earlier in the year. Same pattern again, with a move to new lows and then an unfilled gap to the upside. That gave us a break of resistance around 42 pence, and the shares haven't really looked back since then. Rising trend channel, the floor of the channel there, around £1.23, and while we're above that, looking for the stock to hit as high as 160 or even 170 by the end of February. The key here is obviously holding that uptrend line there and the floor of the channel. On to the best Trump trade that we had on the London market, well, at least so far, and that was Ferrexpo. Here we had the break of resistance really around the 50 pence level. Inverted head and shoulders for that starting in August, and the break of the neckline there at 50 pence. It's been up all the way. Also, we had a bounce off RSI 50 to start the rally, with the combination of the 50-day moving average starting to rise, and from 50 to 120 it was a relatively plain sailing. At the moment, we need to hold 95 pence recent support, and ideally the 50-day line there will come in to support the shares as well for a retest of perhaps £1.20 by the end of this month, given that we are already in January. Much followed stock comes next in the form of Global Petroleum, and this did the trick without any gaps, in fact, but the break of the resistance there around the 0.11 level was a giveaway, as was the bounce off a rising 50-day line. That tends to be a pretty good clue to a stock or a market rising, and in this case that happened for Global. That we then had a golden cross, and even though we've had we had a big pullback, roughly 50%, the shares are still hanging on in there to their rally. At the moment, looking for the shares to remain above the floor of the rising trend channel from April. That's around 0.23, and that's also the level of the 50-day moving average. If we can hold above those two features, it could be up to 0.5 pence by the end of next month, by the end of February. On to a stock which probably most people have given up on, but the shares came back with a vengeance. Gfinity, as you can see from that black triangle that I drew, had the inkling that there was going to be a turnaround here. The initial target here was 0.03, which was obviously duly hit during early December. Second target was up to 0.06, and now we've achieved that with the V-shaped bull flag and trying to break out now, looking for 0.12 hopefully by the end of February. So Gfinity really back in business. A stock that I probably covered more than any other one in the autumn was GSTechnologies, and the reason for that was the unfilled gap to the upside off the lows that we had back in mid-October. Then the first target there was 0.98 and 0.99, and basically it was been up all the way since then with gaps as well. We've had now the third gap, so maybe this is it's time to look at perhaps the shares getting a bit tired now, but we have resistance from 2021 at 3.1 pence, and looking for that really by the end of next month, especially while we remain above the 2.3 pence level, which was resistance on the way down back in 2022. Finishing off the first half of the review with Guardian Metal, and here shares had a beautiful year. Well, they had actually had a good start last year as well, with the unfilled gap off the low back in December. That was around the 8 pence level, and we've been covering the shares basically as a buy since then. Second gap was back in January last year, and basically the shares have delivered all the way up, even with cash calls along the way. There was obviously the August-September pullback, but the shares managed to stay well above the 200-day moving average. Rising trend channel there from February, and the top of the channel there, still promising us a target as high as 44 pence, maybe by the end of the first quarter. If you're looking for the next, or the signal for the next leg up, it would be the RSI breaking back above neutral 50 versus 41 at the moment. That's it for the first half. We'll be back again, or I'll be back again with the second part very soon.